What we are seeing here is an unprecedented level of interest in India. It is still one of the biggest games in town.
The recovery in India is going to be mild and gradual, and in fact would disappoint street estimates.
Support for Mr. Modi and his government has declined because they have not been able to keep their promises.
Join us as we track Finance Minister Arun Jaitley's sales pitch to FIIs and strategic investors in the world's financial capital, the India Roadshow.
It's an Indian summer in the United States of America as Finance Minister Arun Jaitley embarks on an India roadshow to sell the story to foreign investors. From ringing the closing bell at the New York Stock Exchange to walking the corridors of power in Washington, D.C., to talking to Silicon Valley honchos in San Francisco. The finance minister has all bases covered. We're at the New York Stock Exchange where the finance minister has just rung the closing bell. Joining me now, Mr. Arun Jaitley on the floor of the New York Stock Exchange. Sir, appreciate you joining us. It was quite a moment there to see you ring the closing bell and the chair going up, and of course the NYC is dressed in Indian colors. What is the reception that you've got so far from investors? You've had a meeting, I understand, at a lunch organized by KKR where you've spoken with select CEOs. Do they continue to believe in the India story, or are you out here to reassure people about the India story?
Well, it's a combination of both. I think there's a huge interest as far as India is concerned. Interest because India seems to be one of the few global economies which is doing well, which is picking up. And the potential for the year to come and for the next 1 or 2 years is quite large. Now, this is in a situation where growth globally is at best modest, or even very low in some cases. Despite that, India has been able to defy the odds and move up. India further believes that where we moved up, even at a 7%, 7.5% growth rate, this is nowhere close to our potential. And therefore, there is a growing restlessness in India. That restlessness extends to me and to most people in the government of India also, that we see that our optimum targets are now achievable, which is to suggest that the optimum growth rate that we target, moving upwards of 8%, 9% in India, is achievable. And therefore, having embarked on a second phase of a reform program in the last 1 year, we are fairly determined to go ahead with that program. The results seem to be slowly coming in, and I think the best is yet to come. And therefore, that's what we believe. So I'm here really to, you're right, assure global investors that things are happening in India. But global investors are also very competent and very clever people. They analyze things for themselves. And they can also see where the challenges as far as India is concerned are, and the areas where India is likely to grow.
Okay. You spoke about restlessness within government to try and achieve the kind of growth targets that you've got. But there's also restlessness among foreign investors and domestic investors, and I'm sure they've shared some of those concerns with you, that things are not moving as fast as they ought to, that things haven't changed on the ground. I know that the government doesn't buy that argument, but if you were to give them a clear roadmap in terms of what are the priorities, in terms of specific reforms that you intend to carry out, what is it that you've told them? What is the message?
You see, first of all, let me contest the position that things are not moving on the ground. Things are moving on the ground. When your revenues in the last 2 months increased by 37% and 39%, and these are indirect taxation revenues, a very large part of which is attributable to growth in the manufacturing sector, now things are moving in the ground. These are very easy media phrases to use because you don't see things happening on a roundabout or on a road. Things are happening as far as industry is concerned. Things are happening as far as services is concerned. Now, despite a very poor monsoon last year, you didn't go down. You still went up, though very marginally so. Now, I think as far as the government's reform program is concerned, now is the time for action. As far as legislative reforms are concerned, we've done quite a few of them. The taxation reforms are on the ambit. I have already said that direct taxes are going to be brought down further. Yeah. From next year, you'll start seeing the impact. Indirect tax reforms, we are making the changes, which itself is capable of pushing up the economy. putting in that's the GST, putting in a large amount of money into infrastructure, putting in additionally a very large amount of money in the future years as far as irrigation is concerned. That's a lesson that I have personally learned that we need to invest in. And I think the two specific areas where we can grow much faster is manufacturing, on the strength of investment in infrastructure. Some areas where the private sector is capable of investing, some areas where the private sector may be somewhat slow, and therefore the public finances have to take the lead. And I think agriculture is an area, rural infrastructure is an area, if we contribute, we'll see the results. Now, states which have actually invested in agriculture have seen immediate results.
Since we're talking about agriculture, the government today, the cabinet has taken a decision to hike MSP, and this was a demand being made by various state governments. The fear was that the government may do something populist, but you haven't done that. The average hike has been about 4 to 5%. Has this been a conscious decision? And is this a message that you're trying to send out, that this government, come elections or no elections, is not going to border on populist decisions?
Let's be very clear. We have a large amount of food grain surplus in this country. There are particular categories of food grain where you don't want to invest further in. In fact, you want to persuade people to divert to other areas. We need to go in for oilseeds, we need to go in for pulses, rather than everybody concentrate on wheat, on sugarcane or rice for that matter. And therefore, we have to go slowly. At the same time, some increase is necessary because input costs have gone up. And secondly, the growth in rural areas, the real income in rural areas have to be increased. So giving some increase so that agriculturists can also gain partly is one area we are concentrating on. We are going to increase spending on Manrega this year, for instance. That's pumping in money into the rural areas, so there is better purchasing power as far as rural areas is concerned. So you have to balance inflation with the impoverishedness of the Indian farmer. So we give him adequately. At the same time, it must not have such a huge impact as far as inflation is concerned.
Okay. Since we're talking about inflation, it brings me to interest rates, and it's no secret that the government would expect or would want interest rates to come down even further and much more aggressively and faster. In your assessment, do you believe that there is room now for additional interest rate cuts, or do you think that, I know it's a decision that the governor will take, but what is the North Bloc view?
You see, the North Bloc view has always been that we need interest rates which are competitive. You can't expect industry to borrow at very high interest rates and spend on infrastructure.
So clearly they're not competitive.
You can't expect ordinary consumer, even in the retail sector, whether it is housing or it's vehicles or any other area, to borrow at very high rates and spend. And therefore everybody would like the interest rates to come down. At the same time, the Reserve Bank has a dual responsibility. They have to manage inflation, they have to manage growth, so that the two can coexist itself. And therefore, the Reserve Bank has done fairly well as far as inflation is concerned. From a peak of 11% plus, they've brought it down to about 5%. And I think in the last 6 months, between January and June, the central bank has cut rates thrice. I would have liked to see it more. Most Indians would have liked to see it more. That's a responsibility that the Reserve Bank has. Let's wait for the monsoon. At the moment, the monsoon situation looks somewhat better than what was being predicted earlier. And I'm quite sure, as a responsible institution, they will respond to the situation as it emerges.
We're here at the NYSE, and the Forward Markets Commission here has taken up the issue as far as what the Fed intends to do on the interest rates front. The question now is of timing, whether it's going to be September or it'll be the end of the year. Is this an issue that you're going to be taking up when you meet, for instance, the Treasury Secretary? How concerned would you be of a taper tantrum? Your predecessor was very concerned with it. India definitely not as vulnerable then, much more stronger then, but how concerned would you be about a U.S. interest?
We are concerned because the U.S. interest rates will always have, and monetary easing here will have an impact on the global markets. And so India can't say we won't be affected. But I think we are far more stable, we are far stronger today, our fundamentals are far better today, and therefore whatever situation comes, that has to be a part of the U.S. internal decision. Our role in influencing that is negligible. and therefore we'll accept that situation as and when it comes. I think I'm concentrating on strengthening Indian economy, and therefore I can't make it absolutely immune as far as these global trends are concerned, but we must be strong enough to weather any storm.
Speaking of bringing in investments into India, today the FIPB has cleared FDI proposals worth over 6,000 crore rupees. In the conversations that you've had with global business leaders in the US today, what do you see as investment opportunities that they're looking at? What have they expressed to you in terms of concern?
I think there are two things. One, as far as global investors are concerned, amongst the options that they have, India is a priority option. The other economies world over are not doing as well as India is, and therefore there is a huge appetite as far as India has in order to absorb this investment. That's one. Secondly, having had a terrible experience in the previous 3 or 4 years in particular, they want to be assured of policy stability, particularly taxation stability. And I think the amount of damage which was done to India's credibility by things like retrospective taxation, by reform processes coming to an end.
That continues to be a concern, sir. The MAT issue, for instance, has once again raised the issues, though you may say it's a legacy issue, but investors continue to be concerned about it.
You see, the MAT issue, certainly as you answered the question yourself, is a legacy issue. It's a legacy issue which is being sorted out in India. For the future, it's been sorted out. It's only marginally left as to what happens to the past. That past will now, after the vacations, come up before the Supreme Court. And I'm sure, just as several issues such as transfer pricing, etc., have got it sorted out by a very fair judicial process in India, we'll see the end of this issue.